Welcome, and thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance, ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In this episode of ESG Talks, I interview Kyle Purcell and Ben Vivari, co-founders of Till Investors. Till Investors empowers its audience with straightforward guidance on impact investing, working with both investors and organizations to find investments that fit their values and mission. This fall, Kyle and Ben are releasing their first book, Sustainable Investing, an ESG Starter Kit for Everyday Investors. Hi, everyone. This is Emilie Nadler from KBRA's ESG team. Thank you guys for joining me today, Kyle and Ben. I think to start, it would be really helpful for you to describe in more detail why you started Till Investors and really what the firm's mission is.
Absolutely. Ben and I run Purcell Communications, and that is sort of an investment communications shop. We do a lot of work with asset managers, just trying to do reporting and marketing and thought leadership and other kinds of content. And we've done quite a bit of ESG, and both Ben and I have background where we've been very interested in ESG and talking about ESG and trying to explain it. So we started Till Investors as an independent initiative to try to work with our clients, be they institutions, asset managers, advisors, or even everyday investors, to help explain what ESG is and get people thinking about it in clear, constructive ways. You know, one of the things that is striking to us in the work that we do is that regardless of whether we're talking to just an individual investor, who's just vaguely interested in the idea of values-aligned investing, or whether we're talking to a foundation, or whether we're talking to an advisor, or whether we're talking even to like big institutional clients, the fact is that there's a lot of misconceptions and everyone seems to have the same misconceptions. Everyone seems to have the same questions or concerns about what ESG is, what the different strategic approaches are that can be used, how to select the right one, what the risk and return profile would be compared to what they're used to in traditional investments. So we kind of felt like we want to build up our knowledge base and be people who can answer those questions.
Thank you. That leads really well into the next thing that I wanted to talk about, because I think working in the ESG space as the three of us do, one of the challenges really is just the knowledge gap. And I think the backlash that we're seeing in the US is partially a result of that. What are some of the key barriers you've seen in sustainable investing, and how have you worked to close that knowledge gap, particularly with smaller investors and the foundations that you work with?
Yeah, so it's a great question. And the good thing about the knowledge gap, and I would almost call it more of an awareness gap as much as a knowledge gap, people just don't even know that this exists, is that awareness gap extends to the backlash, right? Which, for individuals, retail investors, smaller foundations who might not read the Wall Street Journal every day, there's very little awareness of the backlash as well. Right. For them, you're less fighting against the backlash and just hoping to get their attention. And the real challenge with that when it comes to sustainable investing is that a lot of the reason that the gap is there are the ways that the industry is set up, and it really reinforces those challenges. Calling it something esoteric like ESG, putting up ratings and grades, even Fair Ratings Group, right? It's hard to put up a number and say that's the number of ESG that this thing has. In some cases, it's hard to really believe that there's like a robust methodology behind it, because we know that the data is really messy. And on top of that, there's really low trust in the industry, and we know that there's greenwashing going on. So with all of these different hurdles, the knowledge gap is really reinforced by these issues. And so for people who are in smaller organizations who are mostly just trying to figure out how much they need to save, there is a big leap to, well, how do I invest? And what do I invest in? That's a big step for a lot of people to take. And when we put up these challenges for them, it's very easy for them to say, this is confusing, or it's not worth my time, or it's not worth my trouble, or boy, this sounds really risky, and I just want to make sure that I'm saving for my retirement. And so the gap is there. It's correctable, but it's going to take some changes in the way that the industry communicates.
That's very interesting. I think also, you both are really communications experts first and foremost. So, what are best practices for ESG fund providers to best communicate what ESG means to their firm and also how they're working to make progress on their goals?
Yeah, so it's a great question. And when we tell people how to look at an ESG fund or a rating or a grade or anything, we tell them to ask, two really simple questions, which is, does the fund provider or the rating agency, do they say what they do? And do they do what they say? But it has to be digestible. Because there's all this misconception about ESG, you can't just put ESG up there and hide behind that acronym. ESG is not a tree. You don't just put a tree on your website and say, now we have ESG. But, you need to tell them, what does ESG mean to you? How do you evaluate ESG? And you have to do it in a way that's digestible, because you can go down a really deep rabbit hole on that sort of stuff and lose people very quickly. The best things that we see out there are case studies that you can roll up, where you can say, let me give you an example of a company we invest in, or a grade that we gave, or a rating that we issued, or whatever it is, and let's show you how we went from the bottom up to do it, so you can have faith that we are doing that with all of the grades that we're doing, or all of the investments that we're doing, right? It's not a coincidence that the firms, fund providers that get called out for greenwashing the most are also the least willing to communicate about their process. That's a surefire sign that there's something fishy going on there. Trust in the industry is low. You need to show your work. You need to show it in a way that people are going to be able to understand it and take it in and not get overwhelmed by it.
I would just add briefly that we participated in the US SIF Capitol Hill Days earlier this year, where we went down to talk with legislators about ESG issues as part of their overall sort of investigation into ESG matters. And there's rules and regulations being discussed and proposed, and the people that are in the midst of making those votes, they don't really understand what they're dealing with here either. So the education need, or the awareness need, is really great in a lot of different sectors. And I just sort of feel like there's a lot of effort being focused on, let's make sure we get the data better. Let's make sure that we get the strategies to be in shape. But there's some of that fundamental blocking and tackling that I think needs to take place.
Yeah, I think that's a great point. And KBRA does not offer an ESG rating product ourselves. And that really came from investor feedback. And I think one of the core things that we heard over and over again from investors was just the challenge of understanding ESG ratings with the lack of transparency in methodologies, in weighting, and really even just definitionally what the rating is trying to measure. I think when you look at an ESG rating, that can mean so many different things. It can be weighting more emissions. It can be weighting more like community development, diversity and inclusion. So I think that's a great point, is that really the transparency is key to figure out what ESG means to you, what ESG means to the vendors that you're working with. The next thing I wanted to ask you is really, how do you go about matching the investors with the investments that best support their investing style as well as their sustainability goals?
One of the things that we really try to focus on is moving back toward human language. That's a difficult thing to do in the financial space, where the financial practitioners have a much more substantive and robust understanding of the technical matters that they're putting in place to try to execute on an ESG strategy or an ESG rating or ESG data. But even among more professional clients, a lot of that language is very difficult to understand or interpret, because it's not related to the historical framework for understanding the way that financial strategies are executed. You're talking about incorporating non-financial factors into your decision making. So you need to think clearly about how to talk about those things in a way that registers for people and educates people. So for example, one of the things that we really do is we try to take some of the industry language and interpret it according to more common language that people would use in decision making. For example, we look at exclusionary strategies, ESG integration strategies, and influence strategies. It focus a lot on proxy voting and other forms of influence. And we try to interpret that into what we call fighting styles. So what's your fighting style? How do you like to create change in the world? What do you care about when you're thinking about those non-financial matters? Are you avoiding businesses or, securities that you don't like, or practices that you don't approve of? Do you want to influence those strategies in a way that reflects what you want them to be? Or do you just want to consider those issues, but not have them drive the truck, right? So we sort of talk about the influencing, rewarding, and engaging styles as ways to reflect on what you are looking for from the non-financial impact of the investments that you're making. And we find that especially for intermediaries who have to communicate between what the strategies are and client bases that are trying to understand what strategies are right for them, that kind of language is a lot more helpful.
Since you started Till, have you seen any changes in how investors think about sustainability? For example, are they looking into investing in different types of assets than before, or are they moving away or more toward exclusionary screening? Have you seen any changes in how investors think about these things?
The short answer is yes. And I think that this is an environment where change is commonplace, right? There's a lot of rapid change. Personally, I think that the two changes that really jump out to me are the advancement of regulation. There is so much that is happening in Europe. Europe is certainly well ahead of the other sort of continents in terms of the sort of regulation structure that they're putting in place in their attempts to ferret out greenwashing and to create some standards that can be applied across the industries. That's happening here. The SEC is basically following along the same path, but there's the political backlash and there's, well-financed people who aren't that excited about that regulation. So it's happening more slowly, but it is happening because the demand is there, even from the sort of professional investment set, the asset management world wants those standards so that they have a little bit easier time marketing what they're doing. The other thing is that younger people and women are increasingly in decision-making environments. And we know from multiple studies that when it comes to incorporating non-financial factors into investment decisions, women, millennials, and even that younger Gen Z generation are very motivated to do it. They're very interested in focusing on incorporating non-financial factors into their investment approaches. So to the degree that you're seeing more women and millennials in stewardship roles within organizations or in other kinds of decision-making roles in companies, there's a continued push. The energy remains in place. The backlash isn't going to change that.
Well, you've kind of teed me up perfectly for my final question, and maybe this is kind of partly your answer to that, but I wanted to just get your thoughts on how you both see ESG moving forward.
Yes, Kyle just mentioned, millennials are very interested in this. Women are very interested in it. These are the people who are going to be taking over as, stewards of their family's wealth. They're going to be stepping into leadership roles throughout multiple industries, right? So if they care about this stuff is going to happen. Whether it's called ESG or some other name, there's some other buzz term coming down the pike. The concept of investing with values in mind, the world's going to keep getting hotter. The concept of investing with an eye on climate change, it's just going to become more and more prominent. So the real question for me is what's going to happen with things like regulations? What's going to happen with things like data and standards? These things traditionally are very, very slow. Like we are 100 years-ish since the Great Depression. And, we still don't have an international set of accounting standards, right, that everyone follows. Data standardization is good, but not great. And that's just answering a very simple question of how much money do you have? So when you think about, okay, well, now we're trying to think about, well, how good of a steward are you for the world? And how well do you treat other people? And how well are you addressing climate change? Like, those are big, heavy questions. They are not going to be answered easily, and they might not be answered right. And even if you do get them right, we know that people are going to lie and not tell the truth and try to obfuscate and distract. I think, where I see ESG moving forward is I think there's going to be some understanding of that and some willingness to invest in a way where we don't necessarily know all the answers, but we're really just doing our best. Acknowledging that here's what's in front of us, here's what we care about, we're going to do the best we can, we're going to keep getting better at it, it's maybe never going to be perfect, but we're not going to let the perfect get in the way of the good. And we're still going to invest in ways that people really care about.
Yeah, to sum up from a Till investor's perspective, the train has left the station in terms of ESG being incorporated into the overall investment industry and the processes and the concepts about what investing is. That's not going backwards. That train has definitely left the station. And yet at the same time, there are a lot of people sitting in the station that don't even know there's a train to get on. And that's where we are putting our focus to try to make sure that we can spread that awareness so there's some consistency both in the demand for ESG as well as in the supply.
Well, thank you both so much for coming on today. I think this was a very interesting discussion and really appreciate you guys coming on to the podcast.
Thank you.
Thanks so much, Emilie. It was a great conversation.
This concludes our episode. Please email esg@kbra.com with any questions or comments. We also encourage you to visit KBRA's ESG website at esg.kbra.com, where you can find ESG research related to the topics discussed in this episode, further details on KBRA's ESG approach, and other ESG-related media items. You can also join our mailing list to access our ESG Weekly Roundup newsletter.